Morning, everybody. It's the 28th of April. We are Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
Everything all right?
Yeah, all good.
Superb. Okay, let's get straight into it today then. So yesterday we had blowout numbers from Google or Alphabet, who are Google's parent company, reporting better than anticipated quarterly sales after an increase in digital ad spending by the business, looking to expand during the pandemic reopening. So all good on that front. Microsoft also saw revenues jump amid firm demand for cloud services and the strongest gain in personal computer shipments in more than 2 decades, although they were slightly under what the market had anticipated. On Wall Street, though, it appears as though the market was pretty flat overall. Elsewhere, on sort of the geopolitical side of things, an American warship has fired warning shots when a vessel of Iran's Parliamentary Revolutionary Guard came too close to the patrol in the Persian Gulf. So tensions simmering a little bit there. It's Federal Reserve decision day today. Policymakers are likely to acknowledge a continued acceleration in the economic recovery, but they will stop well short of providing guidance on when conditions would warrant the tapering of asset purchases. So all eyes likely to be on that today, and that may mean that we see some subdued trading ahead of that announcement today, 7:30 this evening for the meeting. So we'll have to wait and see. Although we do have Apple and Facebook both reporting later, I think that's after the market. So it looks as though all the main action today will be happening later on. But there are some interesting bits going on, certainly on the FX side of things. I've seen some bits of interest. Where do you want to start today, Steve? You got some charts to run through on commodities and indices?
Yeah, can do that. Although just saw the European Parliament vote to approve the UK's Brexit trade deal has gone through.
What was that, sorry?
The European Parliament vote to approve UK's Brexit trade deal has just gone through.
Okay.
Um,
Was we expecting that, or has that just come out of nowhere?
I think it was expected. It was like a landslide vote, 660 in favour, 5 voting against it, which were French.
Oh,
And 32 abstentions. Is it
okay.
abstentions or
Well, with that kind of outcome, I imagine that was probably priced in then.
Oh, I've gone a bit all blurry. What's going on there?
There we are. Just
See
refocusing.
better now. Yeah. So yeah, I think that was expected. I think that means zero tariffs, zero quotas, zero ECJ control, zero EU law superiority. So I think it looks like a good thing.
Cool.
Anyway.
I'm going to jump into FX, Steve, because there's some interesting bits I want to show. Starting off with the dollar index. So as people who have been watching will know, I've been talking about this corrective channel that dollar index has been trapped within. In the last couple of days, we've seen a bit of indecision, but what we're seeing today is a little bit of a push to the upside, as you can see, up 0.16% today, and we are breaking above this downtrend channel. Now, obviously, this is a daily chart, so I'd like to see that confirmed on a closing basis. So not getting overly excited yet, but the breakup above this level could signify a continuation higher or a corrective move to the upside in dollar index. So watching that quite closely today as an area of interest. And if we look at euro dollar, it's the flip side of the dollar index chart. We've got this downtrend resistance line here on the daily chart. We've got this corrective channel higher, and we're stalling in and around these levels and potentially threatening to break down below this channel here as well. So if that occurs, then we're looking for a continuation to the downside on euro dollar, and potentially what is forming here is a bigger top pattern on euro dollar. This may be a left shoulder, this may be a head, and maybe what we're forming here is a right shoulder if we get the break of this level here. So potential for a top to form there on euro dollar, and obviously on the flip side of that, potential bottom on dollar index, which has taken a long period of time. These things don't happen overnight. but it's just something I'm continuing to watch for, because I think that's where you could see some big moves occur over the coming weeks and months. And obviously, that's what we're looking for in markets, for big moves, to try and get on top of those trends and ride them for as long as we possibly can. In terms of what impact that's having on other markets, Aussie dollar is quite interesting. Again, we've got a bullish channel here that played out. We've got a wedge that formed. We saw a break of that wedge higher, but we are stalling a little bit. So are we going to see a continuation up, or is this level here at 78.47 going to contain the upside advances? Again, there's another potential for a top pattern maybe taking shape here, and that is the theme really across all dollar markets at the moment. If you look at euro sterling, just away from dollar at the moment, I've been talking about this as well, because I think a reverse head and shoulders is forming here. In order to confirm that, we need to see a break above 87.20. And we're coming close. We've tried on a couple of occasions to get above it, but if we see a nice impulsive move through this resistance level, and we manage to hold on to that to on a closing basis, then I think it will be a case of looking to buy dips up to 89.66, which is the measured move of this inverse head and shoulders pattern. So taking the measurement from the head to the neckline, projecting that higher, and that's where we come in at. So keeping an eye on that one. I think we may see some good action on that over the coming weeks and months if that breaks up. What else was I looking at? Dollar Swiss, I think, looked quite interesting. We've seen a bit of a bullish move on that today, up 0.3% so far. Also looking at dollar yen, we saw a nice corrective move down to this 38.2% fib level at 107.76. We saw a bullish hammer form there, and then we've seen some follow through to the upside. Yesterday was a really strong day. That was my gun to the head trade yesterday, so that worked out quite nicely, and we're holding this trend support as well. So I'm thinking we're going to see some higher prices on that one today. So if you are of the opinion that the dollar index is looking quite strong, and if you look at as we did on the dollar index chart, we've got looking for this break of the channel, then I think dollar yen represents probably the best opportunity to buy dollars at the moment, while the yen is still looking so weak. That pretty much rounds it up for me on FX, on sort of key markets that I'm looking at. So Steve, I'll throw it over to you, and you can run us through some commodities and some indices.
Yeah, okay. We'll go through the commodities first. I'm looking at the daily chart on gold. Obviously, we've got this double bottom in place, and we've had the move higher through the neckline, but we've seen a stalling over the last 4 out of the last 5 trading days, including today. We've seen negative price action overnight and moving into today, and we can see there's potential for a head and shoulder formation forming on gold. Where's my head and shoulders gone? Not there, mate. There. This looks pretty clean as well. Potentially shows us we've broken the neckline and we're trading below it now. So for me, that looks definitely a bit nervy for gold, especially with the dollar index rallying above 91, and that's where we've seen gold coming off. I think if we get a break of this 1763, probably as low as 1760, if we get a clear break of 1760, then we should see this move extending lower, and the measured move on that would be a move towards 1730, obviously backed down to where we see the previous support levels around about the 1720, 1723 area. So that's a potential. Again, we have to wait and see a break of that, but it's shaping up quite nicely on there. I don't know if we can get a volume on gold. Doesn't want to show us. No, doesn't look like it. On the upside, we've got 1785 as resistance, and above that, obviously the $1,800 level, which is a decent psychological level at the moment. Crude oil also, obviously, as Joe mentioned, a few tensions in the Middle East, but I wanted to highlight some levels to be aware of. This is the 4-hour chart, so pretty short term. And we're looking more closely the 60.56 level, so around about 60.50 dollars on the WTI crude oil. That is where we've sort of projected higher from there, but we are starting to see a little bit of momentum stalling there. We've got volume dropping off as well. We can see the volume here. That's moving lower and moving lower, especially as prices moving higher, and momentum stalling pretty sort of like, although it's positive, it's pretty flat, looking to move lower as well. So potential for a drift lower in oil. Resistance above comes in the form of 64.33. That's the high from the 20th, and through there, if we manage to get through there, then 66.41 and 67.80 are also resistance levels. A break of 60.56 would open up a move potentially down below the $59 level, around about 58.75. We've got some pretty decent lows that we've posted in the past historically, and a key level that we've spoken about before is the 57, just above the $57 level. That for me would open up a more intrusive move to the downside. As we can see, there'd be a vacuum area probably down to $54. So almost sitting on the fence with oil. Just wait and see how that plays out over the next couple of days. Moving across to indices, we can see that we're in this corrective channel in FTSE. That's obviously benefiting from the dollar move higher, and here we can see what we were doing in the, get rid of the gun to head from yesterday, but we can see we poked up above this downward trending resistance line. So but it's rejected that nicely. Maybe we can redraw it there. We've got 1-2 points there. That's a third point, so a decent trend line to watch. I think we also look at this swing high here, 69.78. For me, great place if you're getting short on FTSE. Place your stop above that level, above 69.80. On the supportive side, we're looking at levels around about 69.44 currently, but again, I would rather see a break of 69.28 before initiating any shorts. A break of the previous swing low level, that would show that the ending wedge is playing out, so that'd be quite nice. If we look at the daily chart, we can see yesterday's, it's almost it's a doji candle, but they're looking a bit hanging man type candles. The last 3 candles we can see here on the daily. Obviously this is today's price action, so we don't exactly know what that's going to be yet, but quite important. If we do get a negative close on the day, then I would say we really could look at this head and shoulders formation being a great potential trade. However, we don't know. We have to wait and see. That, I mean, obviously, with the dollar strengthening, we could sort of push up towards the high levels around about 70.40. Same sort of formation in the DAX. This right shoulder type of area we're looking at quite closely. We'll see how that plays out over the next coming days. On the weekly chart, we saw last week's bearish outside candle on DAX. That's a negative. Doesn't look too good. Are we just getting a little bit of a bull trap here, sucking people in to get in long, thinking we're going to go higher, and then a reversal? We've got to sort of like respect last week's bearish outside candle. Last week's hanging man candle really in the Dow Jones as well. So, and a negative start to this week, so it's looking a little bit toppy, but we've seen this before. We formed a new all-time high in the Nasdaq, just above 14,000, 14,060, and the S&Ps again. Look at that last week. That's a negative looking candle, but we're still on the front foot as we speak, quite close to the all-time highs, just below 4,200 this week. So. Again, moving on to Aussie 200, expanding wedge formation, hanging man candle. So there's plenty of warning signs out there from the indices that we're not in great shape. The China index, is that the one that's going to lead us lower? Have to wait and see. I don't know if we've got any earnings out today, Joe, of note.
Yes, we do. We have Apple and Facebook.
Oh,
So
biggies.
some lumpy ones, yes.
Yeah, I mean that
obviously tech
obviously
focused as well.
Yeah. So yeah, that could be a little bit of a catalyst and a push either way, but really is teetering on a knife edge at the moment.
Cool. Thank you for that, Steve. Okay, so gun to the head trades from yesterday. We had 2 trades, as we always do, and we went long of dollar yen, which worked out quite nicely, 37.6 pips for 1.79R. And Steve, you were short of the FTSE, 13 pips, 0.64R. So a couple of wins yesterday, which is nice. I've had 3 wins in a row, which is first time that's happened in a while. Hopefully we can keep this ball rolling. So a bit of an uptick in the old P&L. Maybe we're turning the corner here, Steve, and we're going to start trending higher again. Anything you fancy, or shall I go first?
Yeah, you go first and I'll set this up.
Okay, so this is Euro Sterling, and I quite like this because, as I mentioned just a moment ago on that daily chart, we have a potential inverse head and shoulders forming. So we've broken out this wedge, the blue lines here. Nice impulsive move to the upside, continuation higher, stalling around 87.19. So this is the key level that needs to be overcome. If this can be overcome today, then I expect there to be a reasonable push to the upside, potentially some short covering or some fresh buying all occurring around about this kind of level for a push high. So it is preemptive at this stage, but I like what I'm seeing. I think the price action is quite bullish in the very short term. This is the hourly chart. This is the level that we're talking about that needs to be overcome at 87.20. So we're on the move already. 87.04. I'm going to buy it now. Stop loss quite tight today, 86.86, and targeting a move up to 87.40. So only 2.25R on that one today. Pretty tight parameters. Obviously, I think there is potential for a much bigger move if this level is breached, but I'd like to get a win secured on an intraday basis. So just going to go for that today, and maybe revisiting that in the coming days and weeks if the pattern completes.
Yeah, nice one.
What you got, Steve?
I'm sorely tempted to go FTSE again. So yesterday we obviously were expecting the drop off. Where was it yesterday? We were trading around the same levels yesterday, and we just made a new high, and we formed this evening doji star formation. This looks a little bit shooting star like this candle here between 8 o'clock and 9 o'clock, and we've got a negative start to this candle. So it is a bit risky because the dollar is obviously strengthening, but maybe for this trade to work, that dollar strength hopefully will dissipate. As we said, a stop above 69.80. I'm getting short here on the FTSE at what is it, 69.67.8. Stop at 69.87.8, and I'll go for it again. I'll go for the a decent sell off on this. I'm going to go for same as you, Joe, 2.5 to 1. So really looking to get short here. This level of stop at 69.87.8, which would be a clear break of the previous swing high, and a move above this newly drawn downward trending resistance line. So that would mean I'm wrong, and we'd look to for a reversal back down through the 69.28 level. In fact, if it does get down through that 69.28 level, we could easily see it tumble a little bit further, potentially down to let's get ready to let's go for that. Let's go for 4.5 to 1. Let's be greedy. 68.77.8. That's my target.
Okay, interesting. So what's going to kick that on today would be obviously tech numbers, but they're going to come out after market, so I don't know how much impact they'll have. But also we've got FOMC, which is at 7 o'clock today for the decision, and 7:30 for the press conference. Prior to that, we've got crude inventories at 3:30. Other than that, it's pretty light on the economic front. But you never know. Who knows what will happen in the markets today and what news will impact markets. But good luck to you, Steve, on that one. Unless there's anything else, I think we can wrap it up there today.
Yeah, no, quite nice, short and sharp. Lovely.
Brilliant. Okay, have a great day, everyone, and we'll be back tomorrow morning.
Cheers.
Cheers, then. Bye-bye.